Hey, everybody, it's Connor McIver. I do appreciate you tuning in today. Fat to Fit Realtor here in Santa Clarita Valley. I have one of my favorite people in the world, Tim Slominski. He is here in the lending world. I want him to introduce himself. We're going to talk today about a program that a lot of times out there, and Tim will verify this, there's a lot of messy advertising. There's a lot of misleading going on from different entities in the world. A lot of them are have a lot of self-interest. Of course, I get paid by representing buyers and sellers. So, and some people in my position might bend the truth a little bit. I don't, neither does Tim, but here's the deal. We have a program here that really sounds really good. It's a Los Angeles Housing Department first time homebuyer program. I want to introduce it to you. I'll let Tim introduce himself right now. Hey, Tim.
Well, good morning, Connor, and thank you so much for the opportunity to visit with you today. I'm one of the vice presidents of residential lending with Draper and Kramer Mortgage. Interesting fact about our company, we are the oldest FHA lender in the United States. The company was started in 1893. We're mainly a real estate company, commercial residential company, but I'm blessed to be in the mortgage division and love being of service.
I wanted to comment about a few things. Long time in the industry, long time lender. You know your way around mortgages. You know your way around financing. What's nice is I've had clients give me feedback on you. It's almost it's like me talking about real estate or something else I really love. It's more than just a business for you. It's almost like a hobby. You really get into the financial aspect of it, which is impressive.
Well, it's a long time ago. A guy said to me once, be more interested in the client than being interested in yourself. I have a mantra that it's not about me, it's not about you, it's about the client. Client first all the time. You have to be straightforward and care about the clients and really look at their interest versus a commission. And that's the one thing in my industry that really bothers me a lot. There's so many people that only care about their commission. They forget about the people that got them there. And the people I work with, if they don't buy into what I believe with my clients, we don't really work together that much. I would be more than happy to say, hey, love you as a person, but we can't work together. So that's what it's all about. And it is a hobby. It's a passion. I'm an older guy. I should be retired right now, but I love the puzzle and I love being able to help people. So that's it.
Thank you very much, Tim. I want to talk to you about this program. I know you know a lot about it. I have the PDF or the slide share, whatever the presentation is I'm looking at. It's the Los Angeles Housing Department, so it's an official Los Angeles Department of Housing, first time home buyer programs, and this is as of October 11th this year. So this is new stuff. This isn't some fake thing that's being put out there. This is official. So get into it a little bit for us, if you don't mind.
Well, the city of Los Angeles is really intent on creating home ownership for people. This program, and I've seen so many of them. What I liked about this program was it gives you options. It gives you options. There's just not one peg. There's multiple pegs that we can fit you in. If you make this much money, you can get into this. If you're a little higher than that, you can do this. And then if you're even higher than that, you can get into that. Whereas some programs, you have very strict income guidelines that you can't fit into any of those three pegs. So it's pretty interesting. You have to be certified, first of all, to be in this program. So it's not like every loan officer can do it. My marketing department came out today with the piece for me to post. And I'm like, great, guys, but guess what? It has to be listing me as the person, because if we list the company and say that the company, well, we have 575 loan officers. Not all 575 are certified. So you have to be certified under that program. And it's just a matter of being a student of the business and trying to figure it out and partnering with, great realtors.
Let me ask you, with the program, as far as low income purchase assistance, moderate income purchase assistance. So these are two programs in the same under the same housing department, right?
Yes, it's all the same. It's just that so there's the lower income and the moderate income. So the lower income, and I'm going to pull that up in my email so I can be on the same page as you here real quick. Uh, um, sorry about that. I wasn't prepared. You were, so excuse
Oh
me.
no, while you're looking, let me ask you this one, maybe throw you something. This is a down payment assistance program for people that
Yes,
fit in these categories. So if somebody like, I want to buy a house, got a buyer wants to buy a house, they have very little in the way of monies, funds. If they qualify and they fall within these income ranges, which, I mean, what is it? Two people income goes up to $124,600 for a two income household. I mean,
oh
that's
yeah,
that's a lot. That's remarkable. So then they come and this program helps them out with the down payment.
that's correct. But it's actually household size. So
Okay.
as an example, so you're a married couple and you have 5 kids and you're in the low income bracket. So is the what is 80% of the adjusted median income. Your income could actually be, if there's 7 people, and that's based on your tax return. So husband and wife, 5 kids, you now are, I can have up to $125,000 in income.
And that's
So
for the low income group. And then it goes up
and it
moderate.
goes up to the moderate to high, which is up to, let's say that same example, anywhere between 187 to $193,000. That really gives you a lot of buying power. It gets you, it doesn't get you into the low end house. It gets you into the price homes in Los Angeles, and it is strictly Los Angeles. So there's a link that we go to determine if the property qualifies. But funny thing that they say in the training here is you can go to the Thomas Guide. And the Thomas Guide map, how many of us look at Thomas Guide anymore? We just go to Waze. But the
So
Thomas
for our
Guide,
I
it,
was going to say, for our viewers, Thomas Guide, folks, and we have a lot of young folks listening. Thomas Guide was this book, a great book, and it had Los Angeles and Orange County tied together, or whatever. But it was a massive map book with pages and pages of street maps, updated every year. We'd go to Costco or Price Club. It was called Price Club back then. You go there and you get the Thomas Guide. You're real excited, and if you had some extra money in your pocket, you get the laminated one. Whew,
well,
that was
too,
high end.
and a lot of police departments use those too.
Very. We had RD maps with LAPD. It was all about that. So you're talking about has to be in the city of Los Angeles, not the county, but the city.
The city of Los Angeles.
Okay.
So it is strictly for the city of Los Angeles because they want to create home ownership. And that's really exciting that they have that out there for the consumer now. So it gives me a lot of opportunity to assist you as the consumer in buying a home. So I'm not limited. And it's pretty exciting. And this is a down payment assistance program that is a zero payment, zero interest. So it's not counted against your debt to income ratio. So we at the city of Los Angeles is going to give you up to, in some cases, up to $161,000 towards your down payment and closing costs. It's huge. It's huge. Whereas other entities, there was a program out there that was giving a 20% down payment, and it does have to be paid back upon change of title, refinance, but you could refinance the property one time with this agency, but you had to refinance through that agency. With this program, we don't have to do that. If the interest rates drop, guess what? We can do what is called subordination. They will consider allowing us to refinance that loan, the first mortgage, and keep that second mortgage, what we call a silent second, in place and not have to be paid off. So, wow. I can actually, so in today's market, we're in the 7% interest rates. Interest rates drop down to 5. Well, with that one agency, if it's 7% today, it may be 6.5 down in the future. You only can go with them one time. But if you do refinance outside of that program, that second has to be paid off. Whereas this second does not have to be paid off. So it's pretty, gives you a lot of opportunity, a lot of savings, home ownership, stability, giving the kids a yard to play in. Oh my goodness.
Let me ask you, what's the pay? So we'll talk about, because we're already kind of talking about it. How does this get paid off? When do you have to pay back this money? You mentioned not for a refi, but when would that come due?
Okay, here's how the program works. Okay. The second is,
this is the silent second. This is the down payment they gave you.
The silent second is a shared equity. What does that mean? So as an example, if you buy a house for $600,000 and the city of Los Angeles gives you $100,000 loan or a second, okay, they get that $100,000 back. Okay, but it's a percentage of what the selling price was. So you have to pay the 100 back upon sale, upon change of title. So as an example, if you do what is called a quit claim to take it out of your name and put it in someone else's name, that means the loan has to be paid off. So in this particular case, you don't really want to pay the home off or pay the loan off, or sell the home. You want to keep it because that builds wealth for you. Okay. So at that particular case, so if we increase $100,000 in equity on the property, the city's going to get back the city's going to get back 19% or 17% of that profit. So they will get on $100,000. Let's say the value appreciates $100,000. That's 17% of the original selling price. Okay. And here's the really cool thing. Out of that $100,000 profit that you would have made, if you sell the property, there's fees. Guess what? As a realtor, you get paid a commission, right?
Correct.
You also have title and escrow fees, correct?
Correct.
That's an expense. So you only have to give back, in this particular case, at $100,000 gross profit, $17,000 technically needs to get paid back. But let's say that you have $18,000 in fees. Okay, so at 82,000 divided by 17%, or 82,000 times 17% is only, calculator's not working, operator error, $13,940. So they will allow expenses to come off of that profit. But also, too, let's say you did capital improvements. You put in new windows. You put in new air conditioning. Again, another expense. So the city's really not getting a full 17%. They're only getting the percentage of the net gain, which is huge.
So this is, so in the scenario, $600,000 house, we use this program. They lend the buyer the $100,000 in a silent second. Years go by. The buyer says, you know what? I just want to get out of town, want to sell a house. They come and they sell it. And we're talking that they lent them $100,000. Now, when they sell it, there's $100,000 on top of the 100, or there's 100,000 equity. That's what we're talking about. $100,000.
$100,000 equity. So the city's going to get back their initial 100,000.
Okay, got it.
And
so this is where the shared equity comes in. This is what so that comes down. That's the 17-18% dependent.
Yeah.
Minus, so huge. It's off the top, the fees. So the fees are taken out of that scenario.
Correct.
Very nice.
Yeah, it's huge for the consumer.
Wow. So how do you qualify for this then? So
Well,
that's enough of that. That's good. I like that. Okay. I don't see any traps. How do you qualify?
you call me, Tim
Ah,
Slominski, at 805-907-6389. I send you a link. We do the application. The process, we really suggest that we look at a 45 to 60-day escrow. And right now in the industry, um, you know, oh my goodness. Remember 2.5 years or 2 years ago, Connor, where you could get a loan done in 3 weeks because
sure.
there was so much business and all the companies staffed? Well, guess what? The mortgage industry is off 85%. What does that mean? 85% of the staff is gone.
Wow.
So the only people that are left are the cream of the crop. And right now, we used to be 24 hours in underwriting. We are now 72 to 96 hours. Okay. And that is on your initial underwrite. Um, appraisers aren't busy, so they can get an appraisal done quickly.
Sure.
But, the thing that's happening right now is loans are being scrutinized because the underwriters have more time. So the underwriters are really making sure that they are doing everything in the due diligence. The city of Los Angeles portion of it, they say it takes 21 days, and that's 21 business days. So you're looking at 30 days. The city
So
of Los
there's
Angeles,
you're pulling, I was just going to say, so you're pulling all this information just like any other pre-qualification. They call you up, you're asking for a list of all the stuff, they send it over, and then after you look at the credit scores and employment and all this, if they fit, is there minimum FICOs like other? No, this is down payment assistance, so it's not really the loan.
it's
It's not.
it's not FICO driven.
Got it. Okay. Oh wow. All right.
But the other portion of it too is we as a conventional lender for FHA, VA,
Mm,
conventional lending, we only require 30 days of pay stubs in the last 2 months bank statements. Okay. With the city, they require 3 months of pay stubs. They require 3 years worth of W-2s. They require 6 months of bank statements. Okay.
okay.
Why? Because they want to make sure that the income is consistent. There, as the consumer on this program, you only have to invest 1% of the selling price. $600,000, 1% is $6,000. That's all you have to have. Okay. There is what is called reserves. So
Okay.
above and beyond the $6,000 that you have for the down payment, you need 1 month's payment, including property taxes, insurance, mortgage insurance in the bank. And that can be used with your retirement income, things like that. The other caveat to that is, let's say this is liquid assets, so access to the bank. Your retirement accounts do not apply. Okay. So if you have $50,000 in the bank, okay, this program would require you to give 80% of the difference between 50,000 and 40,000. So if you have $40,000 in the bank or $40,002 in the bank, they're going to require 80% of that $2. So anything over 40,000 liquid in the bank is going to have to use towards your purchase. Okay. But if you do not, it doesn't apply. But there's a lot of little intricacies to this program. And I walk you through. I make it, I dummy it down. I used to work with the guy from Georgia, and he used to say, Tim, you're not right bright. Well, what do you mean? You don't have really good memory. So I have to make sure you understand it. If I can understand it and make you understand it, we have no problems. The file goes through smoothly. If we don't fit into that program, we'll know right up front, because with my knowledge and expertise, we don't qualify for that. but we can still do the loan, and it would be based on a different kind of program.
On this one, so people contact you, they qualify, they then contact the real estate agent, hopefully me, and then we go look at houses, we identify a house. I know it's in the city pretty much for sure, but that'd be when I would shoot you a text or an email, say, hey, how about this? Is this house working? Are there requirements for the house besides being in the city?
It has to be habitable.
Okay.
The city will send out an inspector.
Okay.
And if there are, they also require termite. And so termite section 1 has to be done.
Okay.
And that is either from the seller or the buyer. They also require that there is a home warranty on the property for a minimum of a year to cover, electrical, air conditioning, heating, your general coverages.
Okay.
Once they get the home inspection from the city is sent to me and the consumer, and that has to, whatever is called out has to be done. If it is not, it doesn't qualify.
Termite section 1 for the listeners, Tim mentioned that. So that has to be done. Termite section 1 is an infestation. Section 2, termite for buyers and sellers. That's something that could potentially have a problem with termite, but not actual infestation. And the reason why this is brought up is now this is a negotiable item. Not too long ago, what do you think, 5-6 years, when the sellers had to, for the lender's sake, correct termite, section 1 termite. That's kind of sailed. So that's what he means on that. Home warranty. That's such a safe place for a seller to pay for that sort of thing. It's such a safe place. But, some sellers say, I don't want to pay for it. There has to be a home warranty in this case. So that's correct. The other caveat. And general coverage is good. I know he mentioned general coverage. So home warranty covers, like any other insurance, they have all sorts of fancy plans. Some have limos and dinner and candlelight and all. But so basic works for that, which is good. It's just talking to buyers and sellers out there. So that'll be easier. And then the inspection by the city, that's probably why the city needs that 21-day time frame to kind of make sure the property is up to their code.
Correct. And then the city also recommends that the consumer get their own home inspection.
Sure, absolutely.
Okay, and then the consumer pays for that.
So whatever that inspector calls out from the city, those are non-negotiable items. Period.
They're not negotiable. Bob, you want to sell your house and you have 4 broken windows. Guess what, Bob? You got to replace those windows. You got to repair those windows. You have peeling paint, Bob. Guess what, Bob? You need to paint that.
So they're calling out. Are they calling out? Boy, like maybe something like a garage conversion? Could that be an issue, or a violation of building codes? Like maybe not dangerous, contractor grade, or is that gray, or we don't know. It depends on the inspector.
It depends on the inspector. And now with the whole ADU, the accessory dwelling unit.
Yeah, that's a great,
that's a whole different story. What has always been addressed is it done in workmanlike fashion? If there is not a permit, you're going to probably have to, put it back to original.
Very good. That makes complete sense. So really, this is something somebody doesn't have the down payment, they don't have it liquid, or they don't want to use the cash they have on hand to make the purchase. They fit within this program. This really works out well. We always tell people, when you're buying real estate, I kind of like that whole minimum in thing. The least I have to spend to buy a property, that's the best place. I understand. I don't know if this is going to happen, but to buy investment properties, isn't that still like 20-25% depending down payment? That's what's necessary.
Yes. Well, you can get into an investment property with less than that, but it is it's very pricey. Your rates are very, very high in that. This is only for first-time home buyers. It cannot be an investment property.
And what if so it has to be the first time they've ever purchased a home, or they just can't own anything now?
They the first time home buyer is anybody that has not had ownership of a property within 3 years.
Interesting. I didn't know that. That's good. Okay, so that's what they consider first time home buyer. You haven't owned anything in 3 years, don't currently own something. You fit in this program. You can fit in this program
You know,
if you
here's an
qualify.
example. A
Okay.
divorcee, they sold the property. They owned a home before. They're divorced. They've been divorced for 3 years. Guess what? They're a first time home buyer. So they qualify
Nice.
for the program. And
That's
it's not
excellent.
limited to conventional loans. It can be for a veteran. It can be for FHA. It can be what is called home possible, home ready, which gives a little better pricing to the consumer. So if they fall in that median price income, guess what? They get a better rate. So there's less fees that are charged from the what are called the agencies. They're called loan level price adjustments. Okay.
Okay.
Created by Fannie Mae and Freddie Mac. Okay, so that's a whole different conversation. We won't get into the, that one. It's like too convoluted there.
So with this program, what other things can you think of that, besides what they're going to learn from you, that maybe somebody thinking about using this program might need to know? It sounds so good. I mean, there doesn't seem to be much penalty yet, shared ownership or shared equity, but that's kind of the price of admission to go in with very little.
It's
So
you want to
works.
dance, you want to dance, you want to get home ownership. This is really the best thing I've seen. I like to say it's the best thing I've seen since canned beer and sliced bread.
Very nice.
I've looked at other programs. That other program that the state came out with, oh my God. I mean, how many days did it take for that money to dry up? 3?
Yeah, it didn't take long.
It didn't take long. Mm-hmm. And there was a lot of misrepresentation. This is in black and white. I'm just going to talk to Bob and Mary right now, or Bob and Steve, or Mary and, Alice. If you guys want to buy a house, I'm going to give you this whole slide presentation. You'll understand everything that you're getting, because I don't have a good enough memory to lie. I can get in trouble just by waking up. So I'm going to tell you this from the bottom of my heart. You will know everything that you need to know on this program, and there will be no gray area. It's black and white. It's clear. It's, if you fit into that square peg, and, I laugh about this. I tell my underwriters, I just went out and bought a 45-inch by 45-inch piece of wood so that I could put it into a 1/4-inch hole. This is, if it's a 45-inch piece of wood and it's a 45-inch square peg, it fits in that, as long as you fit all of those buttons. But it may sound like it's overwhelming. It may sound like, oh my God, it's too difficult. But what I am doing is partnering with experts. And Connor and I have known each other a long time, run into each other at Starbucks, and have talked over the years. We've done a few transactions together, but this is a gentleman that I know and trust, and is going to walk you through this program to help you achieve home ownership. You're going to build wealth. You're going to build stability. Guess what? All the interest that you're paying on that property, up to $750,000 of a loan, is tax deductible. Guess what? Property taxes are tax deductible. So if it's not deductible, you don't do it. But this is tax deductible. It has great benefits. You're building wealth. You're saving money on taxes. You're giving your children stability. You're putting your children in an area that you want them to go to school to. So, it's the best thing I've seen in years, and I fully support it. And, I don't see a downside.
I don't either. I've looked through this entire presentation that you sent me, and if you're going to send this to every potential purchaser that contacts you, the same thing you sent me.
Yeah.
Yeah. So folks, just to let you know, this is so detailed. After you go through it, there'll be very few questions. Just there probably won't be any. It covers everything, gives you scenarios as well, shows all the limits. And then when after you talk to Tim, everything else will be answered as well. So Tim, I really appreciate you.
Well, no problem. And the other thing, folks,
Mhm.
I got to say this. My phone number, it's 805-907-6389. You can call me 7 days a week. You can call me up until about 9 o'clock at night, because at 9:01, I've fallen asleep on the sofa. So I answer the phone. When you call, your number is also going to be programmed, because I'm going to know your name. I'm not just going to go, hi, how are you? I'm going to say, Mary, how are you? Steve, what's going on? You're not a number. You're a client, but 9 times out of 10, I'm invited over for dinner. And that's what I really love, to be able to say, I would have dinner with him, or I would have dinner with you, because it's a long-term relationship. And, you're the most important thing in the world to your family. And we're just trying to help more families achieve home ownership. And Connor, again, I can't begin to thank you so much for the time today. I always talk a lot, but I'm passionate about what I do, and I will make sure you understand this program.
Tim, thank you very much from the bottom of my heart. My clients, I'll get this published to everybody. Tim Slominski, fantastic lender. His number 805-907-6389. I'll put that in the show notes. I'll also put his contact information in there as well, wherever I post this. Thank you so much for tuning in. And Tim, you're a blessing. Thank you.
Have a great day.
You too, my friend. We'll talk soon. Thanks again.
Bye.